Good morning, good evening, good afternoon, wherever you are. Another 10 questions from the Crypto CFO. So let's get straight into it. Somebody has asked, what should I look for in a cryptocurrency? And that's kind of a broad question. It's like saying, what should I look for in a rental property? What should I look for in a particular stock or share? It really depends on what your aims are. Say, for example, if you wanted long-term stability, you could invest in, say, banks and industrial miners and things like this. Or if you wanted to make a quick buck, then you could invest into something that's a bit more speculative. So there's different cryptocurrencies as there are different stocks on the stock market and different properties, like say in mining towns versus warehouses and residential properties and things like that. So it really depends on your personal taste. You may like to have a selection of different ones, some for long-term growth, some solid and reliable ones, and some that are sort of more breakout ones. Some people like to get free crypto because you really can't lose with free crypto. So you can have a look at things like Sweat Coin and some of the gaming coins, Axie Infinity and some of those sort of things. I will put a link down the bottom for Crillionaire, crillionaire.com. So it's CRY. For crypto, and obviously letters for millionaire or billionaire, depending on how big you want to go. Crillionaire.com will be a profile on a lot of different coins and tell you more about them, so you can decide which ones that you want to invest into, or otherwise you can go with a mutual fund such as Boston Coin. Next question, what is staking? Staking is basically just a jargon term for putting your crypto up for a deposit, same as you would invest your money in a bank deposit or lend your money to someone else, allowing them to use it. So you put up your collateral, someone else is actually borrowing that. Most places will only approve a loan for half of what the person puts up. So say, for example, you might put up 2 Bitcoin, and if you want to borrow against that, someone else wants to borrow against that, they'll have to put up their 2 Bitcoin. They can only borrow 1. So it's a safer thing than the bank, because obviously with the bank, if you put in $10,000 in cash in the bank can actually lend out $100,000, sometimes 19 times as much as what they've actually got on their books. So crypto staking is generally safer, unless the companies are doing something dodgy behind the scenes, which we have seen in the past. And that's why a couple of the DeFi alternative crypto banks have filed for bankruptcy just in the last couple of months. So you really need to choose who you're going to put your deposit with. But basically, it's just a way of earning additional bit of yield. You might say, okay, look, I've got a Bitcoin. What do I do with it? Or you hang on to it until it goes up in value, and then you can sell off pieces of it as you need, or you can borrow against it as you need. But if you want to put it up for staking and earn some extra yield, you may earn 4 to 6% per year on staking. Are bots a good idea? As a general rule, no. There are thousands, if not millions, of guys working on Wall Street, and guys and girls, of course, in investment banks all around the world. And sometimes these people are pulling down 6-figure salaries because they're very, very good at their job. We don't have an artificially intelligent software yet that can pull data from all over the world. Basically, a robot just looks at, oh, the price is going down, maybe I should sell, or maybe I should buy some more. Price is going up, maybe I should sell, maybe I should buy some more. The robots don't have the ability to look at the geopolitical events. You know, for example, there's a war going on, or a prime minister just got shot or kicked out or whatever, and that's going to affect a lot of things. It creates ripple effects right across. I don't have any faith in robots. I've seen a lot over the last 20, 30 years. They really haven't gotten any better. And yeah, I'd steer clear of them. Basically, that's just my opinion. Arbitrage. Ooh, fancy question. Arbitrage is basically just the difference between buying and selling in different places. So, for example, if you're buying mangoes in Africa, they're cheap. They're literally just walk down the street, they're falling off the trees. Whereas if you could get them and sell them in, I don't know, subtropical somewhere in Australia, you can command a premium price. I saw a tray of mangoes the other day in Japan sell for about $5,000. So sometimes you'll have a digital asset such as Bitcoin might be selling on an exchange in the US for say $20,000. Due to increased demand, it might be selling on an exchange in Japan or Korea or a smaller market for $22,000. So if you can buy it on the major exchange, transfer it to the smaller exchange, and then sell it over there, obviously you can make some money. And that's basically it. It's just buying something where it's less valued and selling it where it's more valued. It can be problematic because obviously the smaller markets will have less buyers and less depth in the market. Sometimes you get stuck holding that asset, which is generally not a problem if it's a good asset, but if you're buying it just for the price difference and not for the actual benefits of the project, then it can be problematic. So it's an interesting strategy. I would not use it as 100% my strategy. I would use it as an additional strategy in addition to buying and holding good projects. Can I tell you anything more about Cardano? That's a very specific question and an excellent question. Cardano is one of the coins that we have reviewed on Trillionaire.com. Again, the link in the bottom there. So for any specific coins that you want to have looked at, go there first and have a look at, just type in the blog, in the search box, type in Cardano or ADA, ADA, use the code for that one. We do a deep dive on the good projects. We tend not to cover the bad projects, so if you can't find your coin in there, chances are it may be a bad project, or maybe we just haven't got around to covering it yet. There are 20,000 odd different cryptocurrencies in the marketplace. Probably 13,000 of them are rubbish or scams. So that leaves us with, maybe 5,000 or 6,000 that are actually half decent. And we'll try to cover those as much as we can. So fortunately, you can read about Cardano, that one specifically. Any other ones, just please send through your questions and we'll address them as we get to them. Next question, what is the difference between a crypto wallet and a crypto exchange? Basically, as the name suggests, a crypto wallet is like your personal place where you hold your currencies. If you're a world traveler, you might have a wallet that's got US dollars and Indonesian rupee and Australian dollars and Canadian dollars all in little compartments. A crypto wallet is kind of like that. It's your money, it's in your hands, you're responsible for it. If you lose it, it's gone. You basically can't get it back. If you've lost your keys or your passwords, forget about it. That's why some people may choose to store their money on an exchange, store their crypto on an exchange, because they can actually flip it between the different currencies. You can change from Bitcoin to Ethereum to Cardano to whatever. And it does provide a small level of security because you can access that money with your passwords and things like that. Sometimes the exchange knows your email address or your phone number, so you can recover your funds that way if you happen to lose your phone or lose your computer. The other thing is that obviously when there's a lot of funds together on an exchange, it's like people generally don't go and rob an individual because that individual might only have $2 or $20,000 on them. The criminals will go to the bank, and that's the exchange basically. So some exchanges have been hacked in the past. Mt. Gox is obviously a major example. It happened a few years ago where millions and millions and millions of dollars were stolen by hackers because it was all collected in the one place. So convenience, on the exchange. Security, definitely in your own wallet, sometimes in a hardware wallet, and hide your backup phrases and make sure they're fireproof and floodproof, that sort of stuff. There's a few different ways of storing your crypto, and it would basically depend on what you're going to do with it. If you're intending to hold it, then certainly a custodial wallet of your own ownership and your own design. If you're going to be flipping and trading and that sort of stuff, it may be good to store it on exchange. And then for security purposes, you may store on multiple exchanges and have two-factor authentication and a few security things to guard against you being hacked. Next question, what is a stable coin? Stable coin is a coin that is linked to another currency, sometimes to the US dollar or the Chinese yuan or Japanese yen, whatever, British pound. Supposed to be linked one for one, minus a very, very small amount for the exchange rate. So sometimes you'll find, say, USDC, one of the stable coins, might be, instead of being $1 US, it might be 99.99 or 0.9999, or it might be 1.001 because there's small fluctuations in that as people are trading it. Some stable coins have had issues. Go back and see our last videos on Luna, Terra, MakerDAO, these sort of things. Have a look at the Quillionaire website where we've reviewed those protocols. Oftentimes, it's a good halfway point if you're wanting to, say, sell some cryptocurrency or store some cash that you might be using in the next few months. It can be good to have a stable coin where it basically doesn't fluctuate, because if you think the Bitcoin price is going to go rapidly down, you might want to step out of that, put your money into the stable coin, and then when the price of the Bitcoin goes down, obviously you can jump in quickly and buy more rather than taking it out as cash. Some people do use the stable coin as a quasi term deposit. Put your money in the exchange, stake it for yield, and pick up 8 or 10% interest on that. There are good ones, there are bad ones. Obviously, Terra Luna was a bad one. I personally don't like Tether, USDT, because they say that they're backed one-to-one with the US dollar, but they can't explain where about 75% of their dollars actually are. And rumours abound that they're linked to real estate assets in China and things owned by the Chinese Communist Party and that sort of stuff, which is, hey, I don't know, it's great while it's not being drawn down on, but if everybody wants their dollars back at the same time and the dollars are stored in real estate, you can't get it. It's literally like a bank run. So yeah, good stable coins, but stable coins, do some research, check into those. And just because one is the most popular doesn't mean it is the best. Next question, how can I get high returns, high growth with crypto? Well, basically, how can you get high returns, high growth with anything? You take a lot of risk. As Bitcoin is a major recognized cryptocurrency that's been around for a long time, pretty well everybody knows or can find out the price and the value of that. Hasn't stopped Bitcoin from dropping by 50 or 80% sometimes in a bear market, but we do tend to find that the Bitcoin price isn't going to double in a day. It's not going to quadruple in a month because it's a long-term known fact. Sometimes there's a new project that comes out and the new project is super exciting and super wonderful, and those coins can double and triple inside of a month. That's happened many, many times. Inside of the Boston coin portfolio, we've had no less than 6 occasions where we've bought a coin and that coin has gone up by over 10,000%. So the key there is you're going to be taking some risk on smaller projects that perhaps people haven't heard about, haven't talked about so much. You're going to need to do a lot of homework, and also obviously the key is to diversify, because you don't want to put your life savings into one coin that no one's ever heard of, because yes, it can go up by 10,000%, but it also can disappear and be worth nothing within a few days. So if you're looking at the smaller projects, it is a good idea to diversify and maybe have 10 or 20 smaller projects. And that way, if one of them disappears, you haven't lost all of your money. The other way is, of course, invest into some sensible, safe, well-established coins that have been known for a long time, and then have a little bit of speculative money that you put on these smaller ones that could quadruple, could go up by 10,000%, could drop by 99.99%. So take more risk, but you can manage your risk effectively if you want to do that. Otherwise, obviously, work with a managed fund. Okay, next question is about wallets. You've mentioned Trust Wallet, Phantom Wallet, MetaMask. There is so many different types of wallets around. I wouldn't have a clue how many there is. There's probably more than 1,000. Again, some are good, some are not so good, some serve a different purpose. For example, I've got about 20 different wallets. I'm not recommending that for anybody else, but if you're running $1 billion crypto hedge fund, that maybe you might want to have 20 different wallets for different purposes. MetaMask is a wallet that exists only on your computer. It can't get carried around in your phone. And it's not like one of the exchange wallets where you can actually access it using your email or your phone number or something like that. So MetaMask is used on a lot of sites that require anonymity. If you're switching from one coin to another, or you're buying into a new project, oftentimes they'll use MetaMask. It's integrated into your browser on your computer, and they don't know your name or where you are or whatever. So that's one that's for a particular purpose. Trust Wallet, I have Trust Wallet. I believe that it actually uses email and or phone number. It may even identify you with a passport to see which country you're in, to make sure that you're not buying cryptocurrencies that are banned in your jurisdiction. Phantom Wallet, I believe, allows you to do some onboard staking in there as well. So you can have your assets in your own wallet, but they all are also being lent out by the platform so that you can get some extra yield. Different wallets for different purposes. Some cryptocurrencies may insist on you using a particular wallet because their coin is not compatible with other wallets. That's okay. We've got different blockchains. Like back in the day, before we had the World Wide Web, before the internet, you could hook an Apple computer to the phone line. It could talk to another Apple computer, but it couldn't talk to a Windows machine. You could hook a Windows machine to the phone line. It could talk to another Windows machine, but it couldn't talk to an Apple machine. Nowadays, we've got the standardized World Wide Web, where pretty well any computer can talk to any other computer anywhere in the world. At the moment, we've got different blockchains. Obviously, Bitcoin has its own blockchain. Ethereum has its own blockchain. Solana has its own blockchain. There's other ones, obviously, that I can't think of on the top of my head. And there's also some projects that are working on interoperability, so they can actually allow Bitcoin, for example, to communicate with the Ethereum blockchain and the Solana blockchain. So there's some excellent projects out there that are working on fixing this problem. But as I say, at the moment, you may find that you may need multiple wallets if you're holding multiple coins in different projects for the time being until this whole problem is solved. And sometimes you might like to have an anonymous wallet and a custody wallet. Just depends on what you're doing. Okie dokie. Next question. Who should I follow for up-to-date advice on crypto? Obviously me. Ask me all the questions you like. I'm here all week. Try the veal. There's a few good people, and that probably leads into the next question is who do I follow? I follow very few people. I've been in this space a long time, and I've seen some of the most popular people give very, very bad advice. I've also found that some of the most popular people are getting kickbacks and payments, which really makes them not as unbiased as you'd think when they're being paid $50,000 by a certain company to produce a video. And I won't embarrass them by mentioning any of their names, but some of the most popular ones that you'll see on YouTube and TikTok and these sort of platforms do often have, like, contact them, contact them and say, hey, I'd like you to mention my project on your show, and see if they come back and say, hey, it's $50,000 or it's $10,000 or something like that. That's an easy way to find out. Otherwise, check them out on Twitter and ask people if they're unbiased. A couple of people that I follow, I listen to Michael Saylor, not so much. I listen to Raoul Pal a lot because he does really good macroeconomic stuff, focusing on not just crypto, but what's actually causing the crypto to move, because it is geopolitical events, it's interest rates, it's what's going on in the world, it's supply chain and broader economic factors. So he's a really good guy for that. Also, Ray Dalio is a very good guy for studying the macroeconomic factors that cause the cryptocurrency to move. I also follow Annie from Trade Travel Chill. Follow Jason Pizzono. I know these guys personally. I've watched them develop their career over the last few years and think they're wonderful. And that's probably about it. There might be like 3-4 people that I actually follow, and obviously do a lot of my own research. I subscribe to a lot of newsletters. Some of them are sort of high level financial planning and macroeconomic sort of newsletters filled with a lot of jargon. So I sort of condense all this knowledge, distill it down, see how that sits with how I'm feeling about the markets, and try and simplify it for you guys so that a normal person can understand it without all the jargon. So there we go. Bottom of the questions. Thank you very much for sending in the questions. Please send through more questions and I will do my level best to help you on your crypto journey.